Okay, I'm live. Video, audio is working, yes. Man, it's so weird how that works. Alright, let's go take a look-see here. I better move this to my other screen and log in. No, that's not it. Is that it? That's it. Wait, I got a bunch of screens here. I could do this. Yeah. Alright, so let's go ahead and get started here. I want to go over basically all of my losses. And I'm basically gonna explain and I guess kind of keep this video for myself later so I can go back and look at it of what I'm doing wrong and what I need to start doing better. So I figured I'd live stream it just in case it would help anybody else. Alright, so let's go to my calendar. As you can see here, here's all my losses, but I have not imported other trades. I had a really bad week, which is kind of making me go back and say, hey, you know, you're not doing something right. You gotta fix this, otherwise you're not gonna be a day trader long term. Oh, that's not what we want to do, is it? Let me import these over here real quick. There's a fire starting in my heart, reaching a fever pitch, and it's bringing me out the dark. Don't underestimate the things that I can do. Alright, and there we go. Let's go back to my calendar here. As you can see, I have quite a bit of lost days here. And a bit of green. So when I first started doing this strategy, I was pretty ballsy out of the gate, using a lot of margin. Probably shouldn't eat while doing this, eh? But I was profitable for the first 3 weeks. Actually, the first 4 here. I was basically profitable every week. For the exception of this one, but it's really not a big loss at all. Now obviously you got a good week here, 250 here, and then about $50 here. And then what happened the 27th and the 28th? Well, I got a little bit cocky. I said, hey, you know, I'm up. That weekend I was like telling people, you know, I'm up like $400 to $500 up in day trading. And, you know, I feel like this is actually going to work for me. And then I came back around with a $250 loss and then a $734 loss. And then that fed into March here with more losses on Wednesday and Thursday. And finally I recovered on Friday. I started making a little bit of money. And that kind of made me, that weekend, I went and reflected and said, hey, why did this Zoom trade happen? It was Zoom that I lost all the money on. Why did this Zoom trade happen and what can I do to prevent it? And, you know, I just kind of said, you got to be trading gap and goes. So that's number one, which actually I didn't listen to. Somehow I still was able to make profit on these 4 consecutive days. And then again, I get on this weekend and I'm like, yo, 4 consecutive days, yo, this is great. You know, this is how it's supposed to be. And then I got onto Monday and I just fucking lost it. You know, 777 down in 1 day. Not ideal at all. Uh, not ideal. And then I came back the next day and you know what? I took a little bit smaller size. Oh wait, no. Is this the... Hold up. I wonder if this is my crazy day. No, it's not. What's my crazy day? Is it this one? That's my crazy day, bro. I will love to go over that. So anyway, I came back on Monday and lost $777. Of course, it was a volatile market day. With the gap and go strategy, you want to have kind of a flat market, and you want to have a couple gappers that you can choose from, some up, some down, and plan which way the market is probably going to go that day. But a lot of these gappers, they're not really supposed to be trading with the market. So, you know, market shouldn't matter as much as it does right now, but it matters because the market we're in is a very volatile one, and it kind of controls the entire market right now. Normally, we'll just get a go out, we'll get a nice kind of easy uptrend in the market for all the large cap stocks. I'm gonna go ahead and filter February 1st. That's fine. To now. 60 days is fine. I think we're coming up on 60, if I'm not mistaken. Yep. Okay, so here's my win and losses. As you can see here, my cumulative P&L. It was about break even for the first week or two here, and then we started slowly grinding it. This is how I thought it was going to go. Slowly grinding it. I had a small pullback, totally fine. Thought I would keep grinding to the upside, and what did I do? Took a $250 loss, took a $777 loss. And then I tried to turn it around here, started coming up slowly, and then bam. These are the days that cannot happen. These 2 days not being here, and I'd still be up money. That's the crazy thing. I'd still be up money if those 2 days did not exist. That is crazy. And these were days where I just went crazy. Okay, so I just went crazy, and these are the days that I absolutely have to avoid. And I was not trading the gap and go strategy, believe me. Now, Zoom, we'll go ahead and take a look at Zoom here. The 1 minute and the 5 minute, yes. Here's the 1 minute chart. Alright, so yes, it's technically supposed to be a gap and go. For some reason, I went into the market this day and I was just like, yo, it's gonna go. It's gonna go. It's gonna zoom. That's what what it fucking does. It's zoom, It says it's gonna go. It's gonna go, and that's it. I got in, and it very quickly, right at the top of this candle, as you can see, very quickly turned to the downside. Didn't even have time. I was still setting levels. Didn't even have time to go ahead and make my levels here before it squeezed down through it. And at that point, I was like, you know what? Screw it. I'm going to hold on because the stock's probably going to come up today. It's probably going to break these highs at some point. Of course, didn't end up breaking the highs. And came down completely. And I thought it was going to bounce back up and actually come up and break the highs. So I held through this candle thinking, oh, perfect. We got a doji candle on the 1 minute and we're going to pop up. And then, nope, it gapped lower and then went to break the lows. And there was a technical, I think right here, with 74.20-ish, there was a technical stop in there for on the daily that I really needed to obey. And there's no way I could go past that, so I had to get out. And then, of course, I wasn't just done there, because why would I be done? The stock's going to go up today, right? So I got back in, and then before it even did anything, I got right back out. Stupid, don't do this. I'm making a video. I don't think I can pause this either. Dinner. There's stuff in the freezer. You got Lunchables still? I don't have money. I don't have money to go out, so. Alright. Love you. Pizza? I mean, we're gonna have pizza tomorrow, so probably not. Yeah. Alright, so then I got back in again here, and what did it do? I held it until. So the point was, at this point, after it dropped below these lows, I was like, you know what? We're gonna move my stop down here to the yesterday's close, which was right here, and it just barely hit it, didn't just kind of touch through it, and then bounced back up, and I was like, yes, this is it. It's gonna come back up, and then had to get out. You know, took another huge loss. You know, it'd be fine if it was just the first one, and I realized my mistake. You know, but no, it was a lot. As you can see, Zoom just gapped up, came all the way down. Look at the range on this that I lost. I mean, that's crazy. The daily, as you can see here, the daily looked okay. It looked like we were gapping up, coming back up to the upside, and I thought we were going to break through, but nope. Just kind of went back to the downside. I said no trading plan whatsoever. I got in and it immediately went down. So after this kind of trade here, I implemented do not trade within the first 5 minutes. Because if I didn't trade within the first 5 minutes, I would have completely avoided this. So there's no point, you know. And that was part of my rule anyway. I just kind of wasn't obeying it. I was like, thinking basically these gap and go stocks have to go, but wait the first 5 minutes because that's where everything's going to settle. You know, you're going to realize that you got highs and lows on a 5 minute candle. It's going to be a little bit better for your trades, obviously. So yeah, that was that one. I lost $793 total. I think it was like 400 and some at the beginning, and then I added another almost 400 to it, so yeah, not great. And then Twilio here was the same day, and honestly, it should have been my only trade. If I would have waited the first 5 minutes on everything else, it would have been my only trade. So it was a gap and go stock. Plug my computer in. It was a gap and go stock, and it went straight to the upside. I said, hey, this stock's strong. It came off of the VWAP, and I was like, yeah, this is it. Took it for a long. I could have held, obviously, looking back. Hindsight's 2020. You can always hold longer. But it was about $100 winner. I don't know, what does it say up here? It says 59, but that's because I took a stupid trade secondly. Yeah, look at. I thought I was going to go back over the highs again. Inherently more risky. Like the first time it goes up, very risky to get in, right? But as you bounce off of this moving average for the first time, or VWAP, I think it was VWAP, completely fine to get in. Majority of the time it's going to keep going. But the second time it pulls back, it's more risky. The third time it pulls back, more risky. The fourth time it pulls back, more risky. And we're getting on to the fifth time here that it was pulling back and trying to go back to the upside. At some point, it's going to fail. 80% of these gap and go trades within a few days after they gap up are going to go right back to the downside. But they have momentum on the gap days to the upside. Let's just go back to the calendar. No reports. Yep. So that kind of explains this loss. And I think part of this loss was me having a big loss on this day, which is pretty big problem. I mean, you know, at some point you're going to blow up your account, which mine hasn't blown up, but I've lost 40% of it. So, and it is a small account. So we're gonna cut that. We're gonna size down, which is what you're supposed to do, size down. So that's number one. Step one is size down. Quit taking these big sizes, because you lose 40% in your account, you're probably gonna lose 100% of your account. So just, you know, size down. Just makes sense. It's your first step. I always say everybody wants to size up even more after they have a big loss because they want to get it back right away. It's not it. If it's not the market, you're doing something wrong, your emotions are messed up, size down, which I haven't done yet, so I'm going to this week. Um, let's see what I did here. I don't actually remember. I think it was an okay day actually. Yeah, LI was fine. Huge size for my count. Got out on the squeeze to the downside. Okay, that's a fine gap and go. I'm okay with that. That's fine. 30% of the time that's going to happen. Maybe 35% of the time for me that's going to happen right now. But what I don't like is that, where's my next trade? Time to go back to reports. Okay, what I don't like is the fact that I went into this one. So the day before I traded Nvidia and it was gapping up over the 230, pretty damn good. It was a gap and go stock, just like LI, except it worked. It didn't go back to the downside. This time it was a continuation and it did not work. As you can see here, it just kind of moved sideways, and I was like, yeah, it's probably going to come up. So I bought, and then came back down to the downside. I think that's adding to a loser, isn't it? Or did I get out here too? Or is it 3 buys? Let's see here. Yeah, it's a buy, buy, buy. It's not good. Let's call it adding to a loser. Anyway, I got out on the lows here. It did break just a little bit, false break to the downside, and came back up and broke the highs, where I would have been taking profit, but I didn't. And then I just was down so much, I was like, yo, I'm gonna wait for it to go. So I waited here, and I was like, yep, pull back, and then go back up, and it didn't. Just came back down and broke lows. So yeah, that's the day that kind of made me go, hey, this sucks. I can't have these days. Otherwise, I'm going to be broke. And then I took the shitty Zoom trade the next day because of the emotions that were going through my brain. Now, I got to kind of explain this here because these little losses are generally totally fine. You have this is how it's supposed to look. Big win, moderate loss, small loss, big win, moderate loss, win, win, bigger win, moderate loss, small loss. Now this is where it's becoming a little bit messy as soon as those losers are bigger than my winners, you know. And this is where we get even more messy and then more messy. But like I said, you take just these 2 days away and I'm in profit. You take this day away, I'm in profit. So it's workable. Shit. So also back here, I was basically trading the gap and go strategy pretty rigorous, which is exactly how I'm supposed to be trading the strategy. And then I started getting away from my rules, saying, hey, I'm just going to get some profit, started gambling, having a gambler's mentality. And this is really the gambler's mentality that fed into this day right here, which is a problem. This is not it. Yeah, I went over this one. Okay, so I guess it is this one. What should I start with? I guess we'll start with the first trade of the day that began to mess me up, which is Roku. Roku was a gap to the downside. It wasn't a very big gap to the downside. And then it continued to the downside too much. So there's a point on gap and goes where it can go up or down, depending on if it's an up or down gap. There's a point where it can go, within the first couple minutes to the downside or to the upside. But sooner or later, you got to have a pullback, which is this right here. Usually on a typical gap and go, you want to see it open, kind of go up and then kind of make a nice little U and then go back down to the downside and just keep going. Now, Roku did a little bit different and it was a big down day, and I kind of said, um, I'm gonna take it. Clearly a mistake. But it's still a gap and go technically. It's just probably shouldn't have been traded, and it just came down too much. And then I decided to go short here, which is totally fine. It's totally right. We had these candles forming the U kind of shape, the upside down U, the A, I guess you would say, and we were breaking down below our candle there. And I was saying to myself, yes, it's probably going to keep going. So I got in for the breakdown below 54.50. Didn't come. Moved back up here, and I had to get out over this. This would be a line right here where these two things meet, and it's about a half retracement of the big move here. And then again, I traded it later for basically break even. So this was a pretty big loss. 400. I took way too many shares. How many shares did I have? So I was short 400 shares for almost a $1.21 loss. So yeah, big loss. Big loss. I made a little bit of money here. So that was my first trade of the day. That's the trade that's going to make you go, I should stop trading. But it doesn't. It just kind of makes you go, gotta get that back, gotta get that back. And then you go and you try to get it back. And this shit happens. And we had Ally after that. So basically at this point, I was FOMOing into everything that I could get my hands on. So Ally was a support off of 22.20, which you can see we clearly came down and broke, but I did get some profit off of that. To the upside, VWAP was like up here, never even got to VWAP until later in the day. So yes, it is a gap and go. Obviously, it would have been better to be taken here. And this is what I was doing. I was looking at Roku and thinking, okay, it's going to do the same as the banking stocks. But in all honesty, SVB went down that day, Silicon Valley Bank, and Roku had 25% of their cash holdings in it. Doesn't really matter considering, FDIC, insurance, and other stuff. It didn't matter as much to Roku, to whereas the banking sector, it was all in a crisis mode. And I was looking at this. This is where I traded Roku at. Back to the upside, and this one came down. I had them both on my screen, right? This one came down, and Roku didn't. Then I saw Roku turning back around, and I'm going to go long on Ally because it's at a really big support. I went long, expecting it to get up here into the VWAP. It didn't. Sold out. A little bit of a win. I think that was the only trade that day. Yeah. Okay. Oh, yeah. Okay, now we can watch Meta. We lost $180 on it. Was it a gap and go? No, man. I don't know why I was trading this. Sure, it had a little gap to the downside, and I went short on it. Just stupid. What? Like, why are you going short? But I think obviously my philosophy here was go short at the previous day close, because usually there's a bounce back to the downside. It doesn't make sense. There was zero confirmation. There's zero really probability that it was going to work. We didn't know, other than it was a previous day close, and it should work, but should doesn't always mean anything in the market, and then just pop back to the upside. Meta was also a very strong stock. It also went on in the days after that to rally all the way up above 200, so very, very strong stock. Very stupid trade. Then we can go ahead and take a look at BAC. So I started just trading the banking sector basically all together. Shorting the banks back down to the downside, thinking, hey, it's going to come back down. It didn't. Went back up, broke the highs. But none of these are really as bad as Zoom. You know, Zoom, I didn't have any stop loss potential. It could just go all the way down until I guess I was previous day close, which I was going to get out at. And whereas I didn't have candles set for that day, intraday candles that would have told me, hey, you need to get out, like at least here I had the highs being my stop. So yes, it's not a great trade, but it is a gap and go. It just is not what you want, not how you want to see a gap and go work at all. And you also got to pay attention to the daily. Like, I don't think I was really paying attention to the daily. Like, you can't go down this much in a stock and expect it to just keep going down. Like, there's a point where it's going to have to stop. All right. I think there's one more here. It's just a meta trade. Again, not a gap and go over here. I don't know what I'm doing, to be honest with you. Just dumb trades that shouldn't have been taken. It's days where you get emotionally messed up about your day and you just start taking stupid trades. Out of all of these stocks, there shouldn't have been a trade this day. It was really there shouldn't have been. I mean, yeah, you could say that Roku went to the downside and you had a fine job shorting it. Probably should have took some smaller size, but you know that's how it goes. Or you know you could say what else? Could say Ally would have been an okay trade to the downside, but I took it to the upside off of support. So it's not a gap and go. Typically how it would be traded. Basically none of these are gap and go trades. Besides Roku trying to be just was a stupid trade, down too much. You got to realize, hey, if it's down this much and it's coming down immediately, take smaller size. You know, it's not an A setup. And then I just want to talk about. Let's talk about this day. This is my last. This was for Thursday trading. Yeah. So right out of the gate, I was taking Baidu, which is a stock, mind you, that I have completely sworn off before this day. I've traded Baidu, I've traded Billy, I've traded LI, I've traded all the Chinese stocks, and they screw me over every single time. So it's not a great look. You know, it's not a great look for the Chinese sector. And yeah, I don't like to trade them. But I was watching the trading room, and I was like, yo, they're all taking this. It must be a good trade. And that's where you mess up. You know, I even told myself before I took it, I said, you know, this is Baidu. Don't trade it. I don't trade Baidu. It's in my live even, if you can go back and watch the live. Oh wait, no, I think I made it private. Yeah, it was a bad day. I made that live private, I think. So, is it a gap and go? Yes. Should I have been trading it? No. Simple as that. Simple mess up. And that's the stuff that you have to avoid if you want to be a successful day trader. I gotta go back here. And then my next one was Path, which is not a stock that I normally trade. And I was going to take it. This is where the FOMO kicks in, fear of missing out, right? So I wanted to take it here. The problem I had was that it just broke these lows. And I felt like there was nothing I could do because a stock shouldn't break. If it's going to go up like this, like right here, it shouldn't come back down and base out under the lows. It should be basing out at the lows or above the lows. And it didn't. It went down. I said, there's technically this stock should not be a stock that's going to work. You know? But very, very FOMO, very pissed off about my trade before this on Baidu. I took it at the highs, which I knew was a dumb decision. I knew. It was a dumb decision immediately. And I was like, no, I'm just going to stay in it. It's just being stubborn, you know? And I lost $144. Even more pissed. Okay. And then I traded a small winner on Snap. And then I said, that's not going to get me anywhere. To the short side. Good thing I got out, eh? Just doesn't make any sense to be trading that. It's not a gap and go. Man, this sucks. And then I decided to gamble. And I said to myself, yo, basically F it. You know, I'm putting all my money into one stock and I'm just gonna hope. I looked at this and I said, it's at support. Normally, a gap and go, I would trade this to the upside. I was like, nothing's been working for me. I'm gonna go short. So I went short on it, and I mean, it works. You know, do exactly the opposite of what you were going to do, and it'll probably work. I've done that before. Usually does work. Yeah, so a big gamble here. This is all this is. Broke the lows, came down, took it at support. As a gamble, gamble, gamble. And then later in the day, I came back to the charts and I saw this as a reversal trade, which I don't take reversals very often, but I saw this pop up and I was like, I have to take this trade. And I honestly can't even say it's a bad trade. Like it's a good trade. Like anybody with their right mind can see that this should be a reversal. We have all these candles. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 candles in a row that were basically all green, basically all going to the upside, never broke lows, and then we break the 5-minute lows. 15 times 5 is 45. Yeah, but you gotta calculate that into minutes. So 75 minutes. It basically went straight to the upside, which is you know, 15 candles to the upside. At some point, you got to be like, hey, it's going to reverse. So I want to say, you know, this isn't my strategy and it's not a good trade, but I can't even say it's a bad trade. Like, 15 candles on Microsoft to the upside should be a reversal trade at minimum to the VWAP. And it just didn't happen. You know, sometimes it doesn't happen for us. Nothing you can really do. I don't know the statistics on a reversal, whether it's good to be trading those or not. I honestly could not tell you. So let's go back to reports here. 55% of my trades are still winners. Now here's the thing though. If we take only the first 3 weeks of my trading, so here I traded the second, boom, boom. Yeah, let's just take these, filter them. I have a 66.7 for the first 3.5 weeks of day trading. That's much better, and my overall gain was $429. This is what I wanted to see. This is what I need to be able to see. You know, I had a $260 loss, which is dumb because it was a bigger loss than my gain, so I was still kind of figuring everything out in the beginning there. But overall, I was doing really well. And then I just start messing up, you know? And I'm hoping that I can get back to where I was. But as of right now, we're sitting at 55% win rate. It's not the greatest, you know. You can make money with that win rate, but your losers have to be substantially smaller than your winners. And with the gap and go strategy, we're really trading on a 1-to-1, risk to reward ratio. Maybe 1-to-2, maybe 1-to-3, very, very rarely. It just depends on how the trade works out. But I'm convinced that if I had just stuck to gap and goes within the first 15 minutes, taking an entry, and that's it, I'm convinced I would have still been at a 66% win rate. I can't access any of this. It's fine, I don't need it. I don't think there's any other quality stuff in here. Other than, as you can see, $1,431 down. I don't think I can access drawdown now. So yeah, as you can see here, just a mix of greens and a mix of reds. I'm going to size way down starting Monday, and then we're going to start doing rules here. So I actually have something written out, I believe, in my notes. And I'm going to go ahead and put in here real quick. Yeah. Alright, give me a second here. Or select all. Copy. Drive. Take me 2 seconds to do this. On the right one, yep. Let's go to trading strategies. Okay, let's update this now. There we go. Okay, so as you can see, I've written out, come on. I've basically written everything that I do. So this is my gap and go trading strategy. It's actually pretty important. Feel free to screenshot this if you want, but this is exactly, how the gap and go strategy is supposed to work. Gap and go strategy utilizes daily swings. You can read it 60% of the time, 60 to 70% of the time it works. And this is just an example of meta here of a gap and go that I took that was really good. So I was starting to kind of, I'm not sure on this percentage. I didn't backtest it, so I don't know. But I know that this is a strategy that possibly could work. So the gap fill strategy, it's basically the loss of momentum of the gap and goes. This is not what that would look like. I mean, yeah, I guess it kind of is, but as you can see, we're trending up. Risky trade though on that one. The reversal, I kind of thought, I'm kind of using this one sometimes, but the only reason I'm really using it is because it offers such a really good risk-reward ratio. Small risk-reward opportunities I presented with this strategy, yep. And here's a perfect, meta, perfect reversal right here. No highs, or no new highs on any of these candles, and it's a 5-minute chart. And then the breakdown strategy was another strategy I was utilizing here, thinking that it'll probably work. It's just a loss of momentum again, but it's a breakdown under a support that you've made on a gap and go trade, which would be this one. Makes a support, and then it starts to break down, breaks down, breaks down. Okay, here's my rules. Clearly, I haven't been following these. Because if I had been following that, we would have not been $700 down in a day. But, It's always a good time to start. No more than 3 losses in a row. No more than $250 per day loss. So I'm going to change that to 100 because that's where I'm going. There's really no need with the gap and go strategy to have 3 losses in a row because I shouldn't be trading 3 stocks in a day. At most, I should be trading 2 to 3 stocks in a day. That's it. No trading within the first 5 minutes. That's a big one. That's why I lost a lot of money in the first one. Small size on volatile market days. Yeah, that's important because those gap fills are real. Never add to a losing trade. I did that one time. Not good. Never add more size after a big loss. 100%. Always size down. Never trade the overall market. Yeah, because you cannot predict what's going to happen in the overall market. You can kind of predict what happens in general stocks, but not the overall market. Only trade my strategy. That's big. That's huge. Because the problem I'm having is that I'm trading strategies that are not mine, which makes no sense because what's working is my strategy, the gap and goes. Small size on Monday and Fridays and Chinese stocks. I have actually X'd out Chinese stocks, so there's no Chinese stocks that I will trade as of right now. Now later, if the Chinese market stabilizes, maybe I'll come back to them. But for right now, there's no way I'm trading. It must be up or down 3%. Yeah, that's obvious. And then the ideal scenario, flat market with 2 to 4 gappers that are gapping up and down. Put them on the screen. Just watch for the first 5 minutes and then take a trade if you want to take a trade. So, and then I am kind of biased to the short side because fear is stronger than greed. Most of the time, most people sell out faster than they will take profit. Yeah, and this was big. Only trade gap and goes. It's big for me. Too many gappers makes for a losing day most of the time. It's true. If I'm looking at the daily gappers and I got 8 watches, it's probably going to be a bad day. Or it is going to be an interesting day and I just kind of need to watch all of them, which is hard to do. Mistype that in my notes. So here's a continuation of all that. Must be up 3%, of course. Large cap stock. Must not be Chinese. This is my updated version of this. This is what I made after the last 2 days. Must have a pullback out of the gate within 5 minutes. It doesn't pull back too far. This is important right here because if we pull back too far, which, what's a good, I guess kind of, yeah, this would be a good one. This would be an example of pulling back too far. If we retrace more than half of the gap, it's going to be a bad trade. Pretty much, period. Must have over 100K in pre-market volume. Yep. Must have a good daily with room to move. Yeah, it's important too. It's not as important as other stuff. Because dailies, other than big levels, it's not that important. Must be a slow moving stock. So that's with me. I don't like volatility. So like in Roku, Zoom, those kind of volatile stocks, don't really appreciate them, don't really like them. It must be above $10. 100% it needs to be above $10. I don't trade under 10 because generally what happens when I trade under 10 is I do not win. So stocks must pull back an indefinite amount within 5 to 15 minutes and then base out. Before making an up attempt to the upside or downside, entries are best taken within the 5 to 20 minute mark and exited before 10:30. So another thing I want to add here is that leave if it hits 20 minutes and there's no trade taken. I think it's kind of important there. I'm actually going to start sizing down even more than this. I'm gonna go half size on all of that. Okay. Yep. Can't take more than 2 trades in a day. Okay, so that's important. I can't take more than 2 trades in a day. That's gonna help. So this, yeah, trade the best and leave the rest. If there's nothing that looks good within 20 minutes and leave for the day. Max loss is $100. After I hit $100 in losses for the day, I must stop trading. Let the winners run and cut the losers quick. Losers quick. Must have at least a 1-to-1 risk-reward ratio that's not extra profit or only the ability to get back to the lows or the highs. I should not be trading on any day that the market is gapping up over 0.5%. Gappers work best with a flat market. Size down, half size. For any trade that is deemed more risky than normal, go to 25% if you want to trade on the days where the market is gapping up or down over 0.5% and cut all losses at $1 risk, 50-cent risk. Any 2 days in a row that are losses, then the next day should be taken off and we should reassess our assets and the strategy. I agree with doing that. If 1 week, I mean, I wrote this, right? So if 1 week is a down week, then we need to downsize by 50% and only size back up after a profitable week. So that's what we're doing right now, sizing down. Sizing down in the hope, you know, that we're going to start making profit and then we can size back up. But I think one of the things that kind of needs to happen is this market needs to turn around in terms of gappers. I'm going to make some other worksheets here, but these are definitely the rules I'll be following this week. I think that's it. So basically, if you have something that looks like this, I mean this isn't bad actually. It's still not that bad. If you have something that looks like this, then maybe adhere to this. You know, go ahead, take some time off, go over everything, reassess what you need to be doing better, and then really most importantly in mine is just how can I avoid these days. And I think that this is going to help me avoid those days. You know, all my rules. Especially if 1 week is down, then we need to size down. That's going to help me preserve my account for a lot longer. And you know, sizing down on risky trades and then not taking trades. Zoom wouldn't have been a trade I would have taken if I had been listening. Roku would not have been a trade that I would have taken if I had been listening. Unsure about this one actually. Go 1 minute. So this actually would have been a trade that I would have been taking. So this probably would have been one of my biggest losses here if we were thinking about it in terms of that. No. Come on. Hate that it always does that to me. So this would have probably been my biggest loss. You know, I don't know about BAC. Damn it, I keep doing that. Go back. I don't know about BAC. Let's see if that would have been a loss of mine. Nope, shouldn't have been a loss. Shouldn't have been trading it over that 20 minutes. Lift. Yes, lift would have been a loss. So this would have been my second biggest loss. Baidu said great setup. Yeah, I would have traded that one because it wasn't quite when I was taking the Chinese stocks off. I wouldn't have traded this one at this point because I was sworn off all of those. Why does it keep doing this to me? Meta, big loss in meta, 180. Nope, I wouldn't have lost this one. So it's really just about, thinking about what you're doing. Man. So yeah, let's see my biggest winners. I'm curious. That is not my biggest winners. Why is it BAC? What is up with BAC? So this was a gamble. Remember that. That wouldn't have been here. Very risky trade on shop. Probably still would have been a trade. Nvidia would have been a trade. Google would have been a trade. PanW would have been a trade. Meta would have been a trade. Billy would have been a trade at this point. Ally would not have been a trade. Citigroup would have been a trade. So yeah, basically all my winners would have been trades and all of my losers wouldn't have been trades. So that's kind of what I wanted with this video. Go back over all of your statistics, put them into TraderView, traderview.com, www.tradervue.com, and then you can go ahead and, plot all this out. You don't even have to pay for it, you know. I don't pay for mine. It's completely free. And of course, I've imported 100% of my thing, so I'll have to go pay for it, but it's cheap. I think it's $29. Yeah, $29 to upgrade, you know. But if you only take in 1 to 2 trades a day, and a lot of days you have off, you only need the free version. So that's it. Gonna be done here.